options out there is still pretty decent.
And the default rate actually seems to be falling quite sharply since the pandemic era peak. You can see it in this graph, which really is just exemplified by this part of
Hey.
And the best and worst stocks as the third quarter comes to a close. Is there an underperformer worth buying? Our Trading Nation team will place some bets on that. And as we head to the break, here's a look at some of today's new 52-week highs, including Carmax. Sometimes I wonder what my life would be like if I was just ordinary Joe. How many injured? It's only natural to wonder, what if? Advil Dual Action fights pain 2 ways. It's the first and only FDA-approved combination of Advil plus acetaminophen. Advil targets pain. Acetaminophen blocks it. Advil Dual Action. Fast pain relief that lasts 8 hours.
Ready, sous chef? Using fresh, quality ingredients can make or break your dish. And with HelloFresh, they always deliver, literally, to your doorstep. I love this dish. It's got more layers than a Canadian ski coat. And you won't find these in any old grocery store. Don't forget to add some of that TLC. Want to learn how I just did that? HelloFresh. It's fast, it's fresh, and it's the ultimate scalar shortcut.
Go to HelloFresh.com and use code VOD14 for up to 14 free meals.
People want to be where the situation is. More fact was Monday, 10 Eastern.
1, 2, 1, 2, 3. All they pay for what you need. With Carmax car insurance for Liberty Mutual. Nothing wrong with Liberty Mutual, my friend.
Only pay for what you need. Same or next day doctor's appointments, in person or online.
Visit rocketlawyer.com. You should definitely add that to your contract. Work confidently.
The dramatic fall in shares of Bed Bath & Beyond today, down 22%. You may recall that at one point earlier this year, Bed Bath & Beyond was also one of those so-called meme stocks, gaining a lot of bullish attention on internet chat forums. That stock, by the way, was nearly $54 a share in late January. it's below $18 right now, $17.25. Other meme stocks have also seen some waning performance, specifically when it comes to September. The original one, the OG, GameStop over here, has lost around 22% just this month alone. AMC Entertainment down 26% on a month-to-date basis. Now, if you're looking for, guys, the market cap losses since their highs early this year, GameStop, Tyler Kelly, has lost around $10 billion in market cap. AMC has lost around $13 billion. Those guys, big losers there. Back over to you.
Well, I guess the helium just came out of the balloons, right? I guess you could look at it that way. Dom Chu, thank you very much. A new report says the ransomware threat is being underestimated by Wall Street. According to Barclays, the expected annual cost could reach more than $10 trillion by just 2025. This year, there was an attack every 11 seconds, and the average cost per breach last year was $15 million. Our next guest has a framework for how companies can protect themselves and says there are two industries most at risk. Joining us now is Barclays equity research analyst Anushka Chawala. Anushka, welcome, and I have to say your name is just so much fun to pronounce. I just want to say it over and over and over again. So anyhow, what are those two industries that you say have been are most vulnerable these days, and why is it?
Yeah, so the two industries that we've really flagged as the most vulnerable to ransomware attacks in particular are healthcare and manufacturing. And there are a couple of reasons for that, and they stem from their low tolerance to disruption. So healthcare, for example, there was that mass shift to telehealth last year, and that really wasn't coupled with sufficient cybersecurity controls. The value of medical data is only rising, and it's becoming a very lucrative target for cyber criminals. And so when healthcare attacks could result in the loss of access to patient data or vital medical technology, healthcare facilities are really forced to pay that ransom immediately. And then within manufacturing, we really have seen that digitalization has acted as a double-edged sword. That investment in automation, manufacturing technology has increased the attack surface area, and one trend that we've seen within ransomware is attacks occurring much higher up in supply chains, and that really makes the manufacturers a lot more vulnerable to attacks.
So, do you have a blueprint for the ways companies can defend themselves or fight back? And we will get to, I promise, a couple of the other points you want to make about how to do that. But give me a blueprint on how to fight back.
Sure. So I think the main thing with ransomware is that the threat landscape is evolving so rapidly that preventing attacks entirely is almost impossible. And I think this year has really shown that. But what we look at with this report is a much broader approach to digital security by looking at ways to deter attacks, disrupt them, and really prepare companies to minimize that disruption. And the three things that we point out are digital identities, cryptocurrency regulation, and cybersecurity investment in a more strategic and targeted way.
Anushka, so I think one of the things investors have to think about is if this changes the economics of investments in these areas, in healthcare manufacturing, for instance. So with hospitals, which we don't think of as running very high profit margins, it feels in a way unfair to them. They're tasked with life and death situations, and yet they're getting these ransomware attacks. So how much are they likely to have to spend on all of these new technologies in order to make sure that doesn't happen? And what does that mean for investors on the other side of the equation?
Absolutely. I think for companies that clearly have had funding constraints in the past, investing in full security teams is difficult, and partnering with cybersecurity third-party providers is a great solution. But you're right, funding does come into that. And I think the point here is that, are you making those investments in a clever and strategic way? And what we've seen in the past is many companies and many industries have already invested in cybersecurity, and it's proven insufficient. So what we argue in the report is to really conduct that supply chain analysis and understand where the materiality is, and making sure you're really delegating that funding into the correct places. And I think one of the main ways to do that is to have the proper governance in place, and that's where our discussion on security leaders really comes into that.
You say that Wall Street has undervalued the threat of cyber breach and ransomware. And that would imply then that you think that some of the stocks that are most vulnerable to this in healthcare or manufacturing are therefore overvalued because Wall Street has failed to take in the risk. Am I understanding you correctly? And in those stocks, granted everybody has a vulnerability, but in those stocks that are most vulnerable, how much are they undervaluing the cyber threat or therefore overvaluing the value of the stock? You get my point, sure.
Sure. So I think with ransomware in particular, the nature of the attacks have really changed over the past year. We've now seen these very high-profile attacks that have caught media attention, government attention, and that's led to threats to critical infrastructure and a much larger amount of intangible costs. And we really argue that the damage and estimates that are put out there in the market at the moment are really underestimating that in particular. So the first point is these intangible costs are rising rapidly, and that includes things like business disruption, reputational loss, lost customers, and that's the first point that I think why people are underestimating the damage.
So can you put a ballpark percentage on how much we're overvaluing stocks because we are undervaluing the potential threat? Is it 5% of the stock's value? Is it 5% of profit? What is it?
I think it's very difficult to do that at this stage, mainly because cyber attacks continue to go majority unreported and undetected. It's a very sensitive topic that most companies don't end up disclosing metrics on. So I think assigning a percentage to it is very difficult at this point.
Yeah. Well, I forgive me for trying. I tried, but I knew that it was going to be a very tough thing to put a number on, but I wanted to see if you could, and I understand why it is so difficult to do. Anushka, thank you for your time today. We appreciate it. Anushka Chalawala.
Thank you.
We appreciate it.
Yeah, coming to an end. So does the quarter. Which names took the biggest hits, and should you buy the dips? Stay with us on Power Lunch.
Man, I slept. We gave new ZQL Pure Z's restorative herbal sleep to people who are tired of being tired.
I've never slept like this before. I've never woken up like this before. I feel like doing things. And then doing other things after those things.
It's hard to explain. I'm just back. Crafted with clinically studied, plant-based ingredients that work naturally with your body.
I feel really good.
For restorative sleep like never before.
You invested $10,000 and it turned into $1.3 million. Yeah.
Our core audience is what we call skin in the game fans.
So I definitely think of this as more skill than luck.
100%.
Cryptocurrency trading platforms, it doesn't feel like real money.
Do you realize that Dogecoin has started as a joke? Yes.
People are starting to develop very risky habits. I'm trying to motivate our generation.
Generation Gamble. Premieres Tuesday, October 5th, 8 Eastern, Cnbc.
update at this hour. A 13-year-old student is in critical condition after he was shot by a classmate at his Memphis school. The suspect is in custody after he turned himself in at a police station. His age is not being released, but the school teaches children from kindergarten through 8th grade. Federal authorities are investigating Morgan Stanley, Interactive Brokers, and several advisory firms. Wall Street Journal reporting that it's a money laundering probe. The firms handle the accounts of a businessman who is suspected of helping his cousin, a former Venezuelan oil minister, hide as much as $2 billion in the U.S. financial system. Previously known, over 5 years, supporting documentation for almost 200 warrants requested under the Foreign Intelligence Surveillance Act was missing, destroyed, or incomplete. And this is a strange story. Police in Indiana are showing what they say they found in a van that they pulled over on Interstate 70 for following too closely. 400 pounds of marijuana. Among the clues that led to the search, they say a leafy plant material in the driver's pants and a strong pot odor, I'll say. There is, however, one mystery. We don't know who the dog is, what the dog is doing in that photo. Tyler, maybe it's a police sniffing dog.
Yeah.
I've never seen one that looks like that.
No, wow. Following too close. Who was following whom too closely? That's it.
Okay, so the suspects, the people who were arrested, were allegedly following behind the police too closely. Police pulled them over, and that's what they found.
Thank goodness most criminals are kind of dumb, because following a police person too closely while you have 400 pounds of weed in your truck is sort of dumb, right?
They may have been high.
Maybe they just were, I don't know. All right, hope the dog is enjoying it. Good. Thank you, Rahel. Let's check on the market, shall we? The Dow is anything but high. It is down 300 points, or more than 1% right now. Maybe it's just on a down. Maybe it's on downers. 34,028 is the number there. The S&P 500 also lower as we round out by 0.5%, as we round out the month of September. But the NASDAQ is up by about 0.25%. 10-year yield, there you see it, down at 1.525% after a week that has seen interest rates move higher. Shaping up to be the worst month for the global bond market since early this year. And to bring us all up to date, let's go to Rick Santelli at the CME. Rick?
Yes, September is certainly bringing much higher yields, and it's not only in the U.S., it's all sovereign. Just think about it this way. 10-year note yields started out the month at 131. They're up 21 basis points. 30-year bonds at 193 are up 15. Bond yields went from minus 38 to minus 19, and gilts from 71 to 102 plus 31 basis points. Let's look at a chart going back to last Fed day for 10. This is important. You know, after Wednesday, we still settled at 130. We opened the next day around 130. It wasn't until the Bank of England got much more hawkish that everything started to pop. And if you look at a month to date of 10s and 30s, you can see what I'm talking about. Let's bring in those European yields, shall we? Month to date of bonds and gilts, you can see very similar, up and away. And finally, the reflation trade may be back, and the reasons? Well, they're all around us, but maybe the easiest one is look at a month to date of natural gas and crude oil. Any questions? Finally, the dollar index, finally following interest rates moving to the upside. Month to date of the dollar index, up close to 2%. Kelly, back to you.
Yes, it is. There it goes, Rick. Thank you very much. Now let's get to some of the movers we're watching today. Carmax down more than 10%. The auto retailer missing earnings estimates and reporting a smaller than expected jump in used car sales. This is supposed to be the hottest market of the year. It is still up big for the year, 38%. Still, it comes at a time when people had expected it to report continued gains. KMX down 11%. From the roads to the sky, Virgin Galactic jumping more than 10%, about 12.5% right now after the FAA concluded a probe of that July 11th flight mishap, determining the flight had deviated from its assigned path without communicating the deviation to the FAA. And finally, Restoration Hardware in the red despite a bullish call from Guggenheim. RH down about 3% today, but the firm calls the home furnishings retailer a best idea, arguing it's brand amplifiers. Is that the new term for influencers? That they can propel the stock further. For more on that call, go to cnbc.com/pro. And at Power Lunch, we're seeing supply chain struggles everywhere. And it's all stemming from one key shortage. There aren't enough truck drivers. We'll dig into why this shortage is happening. The CEO of the American Trucking Association joins us next. Plus, we're continuing to build a dream portfolio with our Powerhouse Blueprint. The stock picks this week when Power Lunch returns.
That's why we created HelloFresh Market, your one-stop shop for every satisfying bite of the week. That means quick meals, your meals for the week, get whatever else you're in the mood for, because you deserve it. Welcome to HelloFresh Market.
Go to HelloFresh.com and use code VOD14 for up to 14 free meals.
Don't settle for products that give you a sort of white smile. Try Crest Whitening Emulsions for 100% whiter teeth. Its highly active peroxide droplets swipe on in seconds and stays on teeth longer to continue whitening long after you apply with virtually no sensitivity. No rinsing, no brushing off. Just apply and go. Try Crest Whitening Emulsions. Better, faster, 100% whiter teeth. Shop CrestWhiteSmile.com.
Tune in, Protect Check. Zero in on opportunities. Red hot startups from the East Coast and the West Coast. The go-to destination for investors. Check. Weekdays, 11 a.m. Eastern, 8 a.m. Pacific. Cnbc.
Raise your standards and lower your costs. Take payments to Square Terminal. Same or next day doctor's appointments, in person or online.
Welcome back to Power Lunch. The oil market closing for the day. West Texas crude climbing throughout the day, higher by about 0.5%. Now around $75 a barrel, a little above it actually at $75.19. Let's see, nat gas higher by 6%, as you see right there. Another move upward for that commodity at 5.827, closing a big month up, 35%, Kelly, in September.
Huge. And as we've been reporting, the energy crisis in Europe is being driven in part by a shortage of truck drivers. That's how they ended up with that shortage of gasoline stations. It's evident here in the U.S. as well, though. According to the American Trucking Association, more than 1 million drivers need to be hired over the next decade to keep up with retirements and increased shipping demand. So what can be done and which industries could feel the impact the most? Let's bring in Chris Spear. He is CEO of the American Trucking Association. Chris, welcome. What makes our shortage different from the UK's?
Well, I think the UK is experiencing something that's Brexit-induced. It was largely fueled by immigration. So when you have a lot of the products that are coming into Great Britain, a lot of it, including fuel, driven by Eastern European drivers, they're now stuck at Calais. It's more of a processing problem of getting those trucks into the country to deliver their goods. So that's a little bit different feel. Our problem is a lot more vast. It's got a lot more factors attributing to it. We're seeing port inefficiencies. You've seen the backlog of ships. If you look at Asia too, they're operating at 50% pre-COVID manufacturing levels. Their ships are just as backed up in their ports as ours. But you've also got a lot of other factors, including driver and worker shortages, chip shortages, pipeline hacks, a whole host of factors, including things we don't control, like natural disasters. You layer all that with COVID, it's amazing that our supply chain is as resilient as it is. But these are all factors that contribute, and then the driver shortage on top of it.
Right.
Getting talent back into the trucking industry is going to be key to gluing the economy back together.
You know, I'm glad you brought up the Brexit issue. It would seem that their problems are more acute. Maybe ours are more chronic. You know, they lost a lot of drivers overnight, like you said, and then they have sort of these holdups at the ports now. Whereas the warnings that we have about 1 million, vacancies is really over the next decade. So, I listen to these discussions and you think, okay, is it just going to be we're warned, nothing really happens, or is it we're being warned, and all of a sudden it gets really bad and everyone goes, oh, why didn't we do anything about this? You know what I mean? Which way do you think we're headed?
Well, it's inflated now because everybody's experiencing a shortage. You see it at grocery stores, and restaurants, even airlines and pilots and flight attendants. Everybody's experiencing it. Our views, welcome to the show. We came into the pandemic with a 61,000 employee shortage on drivers, and now we're predicting 160,000 short over the next 7 years. So this is a problem that we've been working on for years, not just COVID-induced. So we've got to look at existing drivers. We've got to look at what they're paid. We've got to look at their health care, wellness programs, their training. We've got to go after exiting service member and veterans, urban hiring, women and minorities, even younger people, are bringing new talents and drivers. Right now we're having to move a lot more with a lot fewer trucks and drivers, and that's the strain.
There are two things that leap out at me. One is that the wage level is not all that high for a very demanding job. I mean, we had the average number there is $47,000 a year. These are experienced people in many cases with who have specialized knowledge and skill. That's number one. So I'd like to have you address that. The other thing is the average age of the drivers and the fact that so many of them are really probably getting ready to retire. How do you get more younger drivers in the pipeline? And one way, obviously, would be to raise pay.
Well, the existing workforce is a reflection of the problem. We do have an aging workforce. We're averaging around 50, which is very high over the national average. The pay is also an issue, and it's something we've recognized. But if you look at all modes in the transportation sector, trucking is paying more in salary increases over the last 7 years than any other mode. So we are paying more. I think healthcare, wellness programs, training, also image matters. And I think we have a very patriotic, hardworking, loyal workforce. They've been out there doing this throughout pandemic, delivering the PPE, now the vaccines, making certain that our country comes out of this COVID rut. But we really need to take a hard look long term at where we attract that new talent. 18 to 20-year-olds is definitely an area that we want to explore. They're not currently allowed under federal law to cross state lines, although 49 states...
I thought he said prostate lines.
Doing interstate commerce, we've got to invest more in training so that they can safely and responsibly operate that equipment. We send our 18 to 20-year-olds overseas to protect our freedom. I'm pretty sure we can train them to drive a Class 8 across state lines.
Yeah, I think
okay.
people are understandably nervous. Young drivers have a much poorer safety record, obviously, than more experienced drivers do. But you mentioned that the idea of image. What are you talking about there? And I can imagine that a young person in his or her 20s and 30s would like to feel good about what they're doing, and I think trucking could be a part of that. What would you like to spiff up about the image?
Well, I think just look at our current drivers. I mean, during the pandemic, some of the most patriotic, hardworking people, they got in their cabs during COVID, the early weeks of COVID, when a lot of it wasn't known. They didn't know if they would come back with the virus, affect their families, their spouses. A lot of risk there, but yet they got in, they got the job done. The store shelves were depleted, toilet paper to milk, eggs, bread, all the way to PPE and now the vaccines. And they did it just as they have been for years. I've driven several times across the country, and when you see billboards in cornfields or banners flying off of overpasses thanking a trucker, that's recognition that we haven't seen our drivers get for many years. It's well earned and it's deserved, and it's nice to see it come in when it matters most. That's the image we really need to capture and pay forward. So when you're attracting new talent into the industry, they identify with us as hardworking, patriotic. And oh, by the way, you can earn a very good salary, up to $60,000 on average with full benefits, but you don't have to have all the college degree to go with it. These are we put so much emphasis on having to get a college degree when you really don't have to. There's a lot of professions out there that are very, very sound, very secure, and we're a big family in trucking. We'll take care of our own. So we invite those people to come into trucking and help support our economy going forward.
To flip it on its head, Chris, this was my dad's idea. He thinks that college kids, I didn't know the age was an issue, that maybe they should all go drive a truck for a year, pad out that college fund. You know, it doesn't have to be an either or. He was kind of joking, but if that's the workforce that you're aiming for anyway, what better way to see the country?
Well, I've got 4 kids. My third, we asked him what he wanted to do. He's getting ready to go to college. He's a junior in high school, and he said, I want to be a mechanic. And quite frankly, just like drivers, we have a technician shortage.
Yeah.
So my wife and I welcome that. We're proud, partly because he knows what he wants to do, and he also knows, he's not ripe currently for going to college. This is a better path for him. And I think there's a lot of young people out there that are technology savvy. They're gamers, they're software. There's going to be a lot more technology and software on these trucks going forward. He's identifying with that. So there might be a trend there that we can tap into.
You are speaking to the choir here. I think you're exactly right on that. When you get a skill, number one, no one can ever take it away from you. And when you get a skill, you will never go hungry because you will always be able to find work. And if that skill is driving a truck, if that skill is cutting someone's hair, if that skill is hanging drywall, it's a skill. And I would tell you, the guys and women who have the Chris,
God bless them all.
damn straight. Chris Spear, thanks. We appreciate
Thank you for having me on, Tyler.
I think we're about to take a trucking tour across America.
Here's my editorializing. The facts, the truth, the news, that's all we're about here now. All right, happy to break the blueprint to your powerhouse portfolio. Today we look at appliance makers, retailers. Power Lunch will be right back.
Your eyes, beautiful on the outside, but if you have diabetes, there can be some not so pretty stuff going on inside. It's true, with diabetic retinopathy, excess sugar can damage blood vessels, causing vision loss or even blindness. So remember this, now is the time to get your eyes checked. Eye care is important to your long-term diabetes management. See a path forward with actions and treatments that may help your eyes and protect against vision loss. Visit nowic.com and take control of your sight.
Tune in, Protect Jack. Zero in on opportunities. Red hot startups from the East Coast and the West Coast. The go-to destination for investors. Check Jack. Weekdays, 11 a.m. Eastern, 8 a.m. Pacific. Cnbc.
1, 2, 1, 2, 3. Only pay for what you need. With Catalyzed car trips from Liberty Mutual. Nothing rhymes with Liberty Mutual.
Only pay for what you need.
Liberty, 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 liberty.
Introducing 48 square centimeters of 2% cashback earning potential. This is the card built for real life. The new Wells Fargo Active Cash Visa credit card, that's real life ready.
Welcome back, everybody. Today we continue our series helping you build a powerhouse portfolio. Now, we built the house, we did the foundation, the windows, and all that. Then we furnished it. This week we're heading to the kitchen, highlighting appliances and the companies that manufacture and sell them. We're talking refrigerators, ovens, microwaves, and more, sold or made by names like Whirlpool, Lowe's, and Home Depot. Which of these names should you consider investing in? Let's ask Liz Suzuki. She's Senior Hardlines Retail Analyst at BofA Securities. Great to have you back, Liz. Are there any kind of niche names here that, well, all right, in full confession, that I just need to know about?
Yeah, I mean, I think everyone thinks of some of the obvious names like Whirlpool being an appliance manufacturer, or even Home Depot and Lowe's who sell a lot of appliances, although it's really only about 10% of their sales, 10% of sales or so. So really a pretty big category for them, and a really high ticket category as well.
Why do you have a buy on Home Depot, Best Buy, Lowe's, all of the retailers, but a hold on Whirlpool itself?
Yeah, I mean, I think this is a tough time for manufacturers. I mean, the same chip shortages, steel prices rising, things that are impacting autos right now are also impacting the appliance market. And so supply is a problem. I mean, you've been talking about supply chain issues all day long, from paper to trucking to all sorts of other elements. And so for appliance manufacturers, it is kind of challenging, and it could compress margins. We've been hearing a number of manufacturers pre-announcing negatively. And I think for retailers, which have a broader swath of products and who are tied really to the U.S. consumer, I mean, you don't want to discount the power of the U.S. consumer. People are still going out and shopping, and they're paying more for product. And so the retailers that have the product, which are generally those larger retailers that have great relationships with their suppliers and are able to pay up for product as well and for shipping, then they're able to actually get product to consumers, and that's a huge advantage in this market.
The appliance market, having recently done a kitchen, fascinates me. I don't know who owns Jenn-Air. I don't know who owns Wolf. I don't know who owns the GE brand anymore, honestly. Maybe they're American companies, maybe they're not. But I wonder whether the powerhouses in appliance manufacturing are now non-U.S. companies like Bosch, like LG, like Samsung, like Electrolux, and others.
Yeah, I mean, that's a fair point. If you look at market share trends over the last decade, I mean, Whirlpool was the incumbent strong North American brand, and it has been losing some share to LG and Samsung in particular. Those are the two that have really been disruptive in this market. And when you think about the fact that they're also chip manufacturers and are able to get that product a little easier, it does create this difficult environment for Whirlpool to keep up.
I think it's the Sub-Zero group, Ty.
Sub-Zero. I was trying to think of Sub-Zero.
If I look into it, Liz, actually, what Tyler's saying makes me wonder if the big technology companies are going to increasingly move into this space. In the same way that we already have display panels on the Samsung refrigerators, could that be coming to other parts of the kitchen and be a long-term risk to some of these names?
Yeah, I mean, I think it's something that's been a trend for a while. It's been taking place, and at this point, it's really about, as we look at Whirlpool in particular, and we look at where the stock trades, it's at a very low multiple relative to a lot of retail names and even some of their international competitors. And I think that is baking in that that gradual market share loss. But it's not inevitable that this is going to be an ongoing trend. If we look in the automotive market, for example, I think I draw a lot of parallels there. And so I think that it'll be interesting to watch this market progress. But again, the U.S. consumer is in very strong shape. So I think that this is a rising tide that could lift all boats. Just maybe a slight disadvantage for a Whirlpool versus some of the retailers that sell all of the brands.
Exactly, they can sell no matter what's going on. Liz, we really appreciate it. And Tyler, Sub-Zero is based in Madison, Wisconsin.
Was that right? Okay. So what other brands do they own?
Looks like Sub-Zero, Wolf, and Cove, which I'm not familiar with. Okay. I'm sure there are many others.
Yeah.
They would be a good one to talk to.
There was a rising tide in my town that lifted all appliances about 3 weeks ago. And there are a lot of appliances that need replacing now.
Oh, my parents' building in Connecticut, they can't get an elevator because there's a parts shortage, and everyone needs parts for everything right now because everything was destroyed in the floods. Yeah, so good luck.
All right, still ahead, a volatile month for stocks coming to an end and none too soon. We will look at the biggest losers and which names are worth buying for the months ahead. We'll be right back for Power Lunch.
I love you.
TQQQ. It is hard to say what's going to happen here with the debt ceiling.
And so because of that, I'm going to wait for the bottom to form over the coming days. Probably will not be buying in October. I have converted to cash and 10% gold. And that is working for me. And I'm going to be waiting for the bottom.
Then I learned my mop could be loaded with bacteria. That means I gotta clean my mop too? Oh, so I got a super wet jet to get it cleaner. Clean. I stick on a fresh pad, boom, it's ready to go. The spray breaks down dirt, and the pad absorbs it deep inside. Unlike my mop that can spread it around. And wet jet's even safe on wood. All this? It's so simple.
Test.
Test.
Ah, there's a delay.
We invested $10,000 and it turned into $1.3 million. Yeah.
Our core audience is what we call skin in the game fans.
They definitely think of this as more skill than luck.
100%. Cryptocurrency trading platform that doesn't feel like real money.
Do you realize that Dogecoin was started as a joke? Yes.
People are trying to develop very risky habits. I'm trying to motivate our generation.
Generation Gap Investing Club.
Are you looking to buy or sell a home? How do you know what it's really worth? Ownerly.com gives you access to home estimates used by the pros. Enter the address and see the home value instantly. Come to Ownerly.com.
Breaker.
Hi, Mr. Wonderful here. I believe that startup investing is key to building wealth, but it's hard for everyday people to find access to these deals. Well, I've got good news. On Start Engine, you can discover hundreds of startups raising capital and begin building your portfolio today.
I am setting up my stream here,
own a piece of the next great
so
business.
just bear with me
It's
today.
your turn to become a shark. Join me at startengine.com.
Smart news.
I was only watching news I agreed with.
I was only getting news from social media.
Now, I use smart news.
It has news from all sides.
I
trust
trust
Smart News. Download Smart News for free today.
Everybody, well, I'll be darned. It is the end of the third quarter, and the worst performers are saying good riddance. Check out this diverse bunch. Beyond Meat, Roku, Gap, and Peloton among the names with heavy losses. There you see them all down in the high double-digit numbers. What about the Up and Up, your Trading Nation team? Which ones are coming up?
Peloton, just terrible. Been telling everybody, stay away from it.
Jewel Financial. Quint, give me something to get excited about.
Well, I don't know if it's all that exciting, Tyler, but a name that we are looking at going into the next quarter is Phillips 66. This particular company, is in the refining space and has not really participated with the uptick in oil. It's an attractive value play for us. It's trading 11 times earnings, less than 1 time sales, boasts a 5% dividend. But I think people forget this is kind of a reopening play as well. They've got 7,500 retail locations, and as more people take to the roads, I think that they're going to continue to do well. And so it's a good, attractive value. I think the risk reward is right
Well,
here.
in a year that's been good for energy, why haven't they participated?
I think, again, it's because of the concentration in the retail location. So I think as we see that come back on, and as all of a sudden that retail picks up with reopening, I think they'll play catch up in the energy space.
All right, JC, what do you think? Give me something to get excited about.
Well, Tyler, it is always a fun exercise, to periodically go through names that are down and out over the last month, over the last quarter, right? Because that's where you find, a lot of times, value. You find stocks that undershoot fundamental fair value. So, there are plenty of names to be excited about. But just because the stock is down and out doesn't mean it's buyable, right? That's an easy way to lose money.
Some things are values for a reason. Yeah.
Exactly. But what we want to do technically is you want to find the names that are oversold, but the key point of being oversold is you also want to find the names that are sitting on technical support, right? Levels where buyers have historically stepped up and supported the stock. And that's why I'm excited about Roku right here. If you look at the chart of Roku, there's a clear double top at $500. That's a fancy way of saying that's where the sellers sit. But conversely, right at that $300 level, right around where the stock is trading now, that has been where the buyers have showed up over the last few months. So I'm expecting a pretty strong oversold bounce off support, and that gives us 20% upside to that $375 level. So I think Roku is exciting here.
Interesting. So that little tail there at the right edge of the mark where we had a little arrow on it, That's not what it's done. It's come down to that level, that support level that you described, and then what we're anticipating would be that it might go back up. Gentlemen, thank you very much. Have a great weekend. JC and Quinn, thanks for helping us today on Trading Nation. And you can head to our website or follow us on Twitter @Trading Nation.
Up next, need a pumpkin? Please tell me there's not a pumpkin shortage.
I don't know.
If you need a tree for
Do
Christmas,
they have chips? They don't have chips. They have seeds.
maybe it's Uber. Their next big move is into holiday delivery to guarantee you'll get all your pumpkins and seeds and the rest of it. We'll have details right after that.
And now, the latest from TradingNation.cnbc.com and a word from our sponsor.
Generally speaking, a strong dollar is good for the economy, but that doesn't mean that all companies are going to benefit equally. In fact, companies that do a lot of business abroad and those that are in manufacturing tend to be more vulnerable to a strong dollar. So if you believe that the dollar's going higher, you might want to check your exposure to these types of companies. I'm Joanna Payne, and Schwab is the better place for traders. Hey, it's me, your dry skin. I'm craving something we're missing. The ceramides in CeraVe. They help restore my natural barrier so I can lock in moisture. We've got to have each other's backs. CeraVe, developed with dermatologists.
I got you!
What is this place?
I love finding out things that other people don't want me to know.
Find yourself in these situations and see who you are.
And that's just part of the bargain.
We're for those who love to discover, who know an open mind is the only kind, who are their own personal stylist, who know where to escape. You can discover even more, and never ever stop discovering. Spend less, discover more at TJ Maxx.
Pretty amazing. Let's pull the cover off. What's it gonna take to put you in the car? Like, oh my goodness. I love a car that is. Well, I'm pretty impressed. Oh my god. Yes!
Finding your new favorite spot. Piece of, you know you really have to try this cake.
Wow.
Get exclusive access to sought-after restaurants. One of the many reasons you're with Amex Platinum.
Don't like surprises? Proactive notifications from Fidelity keep you tuned in all day long. So when something happens that could affect your portfolio, you can act quickly. That's Decision Tech. Only from Fidelity.
Do you need holiday items delivered? Uber wants to help and also to capture a piece of the holiday spending market. Dom Chu has more on this new venture.
All right, so if you take a look at the reasons why this is important, this is ride-hailing and delivery giant Uber Technologies taking another step to solidify its place in consumers' minds as the go-to company for delivery. So the latest is a pop-up shop, if you will, within the Uber Eats side of their business. Uber is partnering with Proper Companies, which is the parent of various holiday products operations like Mr. Jack-O-Lantern's Pumpkin Patch and Mr. Jingle's Christmas Trees, for those people who live in the West Palm Beach or Southern California markets. What they're going to do is give customers the chance to buy seasonal items like pumpkins and pumpkin decorating kits and then have them delivered right to their door for a price. So the partnership is only, like I said, in the West Palm Beach, Florida, and Los Angeles and San Diego markets right now. But more than anything, it's a way of trying to grow a business that thrived during the pandemic era, which is delivery, not just food, but groceries, alcohol, pharmacy. Now, I'm not sure about you guys. I would pay to have the holiday stuff delivered to beat the crowds, but I still find grocery shopping and going to the liquor store soothing and therapeutic for me.
Thank you.
You guys can do Carmax for me anytime.
Happy holidays,
We'll do it. We'll do it.
I'm gonna bring
Thanks
my
everybody for watching Power Lunch. Closing bell starts right about now. See you tomorrow.
Time to get
Thank you so much. Welcome to the closing bell, everyone. I'm Wilfred Ross at the New York Stock Exchange. A sloppy September is about to come to a close with another rough day on Wall Street. The major averages turning sharply lower mid-session, but are well off the worst levels of the day as we head into the final hour of trade, Sarah.
Welcome everyone, I'm Sarah Eisen. Let's look at what is driving the action right now. Uncertainty around the debt ceiling and the infrastructure bill all weighing on sentiment today. Senator Joe Manchin saying this afternoon that the most he'd want to spend on a reconciliation bill is $1.5 trillion, about $2 trillion short of what was being talked about. NASDAQ is outperforming for a change as the upswing in bond yields takes a pause, and supply chain concerns are weighing heavily on some names today, including Bed Bath & Beyond getting slammed. Missing estimates in part on those rising costs. 59 minutes left to go in the session, the month, and the third quarter.
Coming up on today's show, we've got some great guests to break down this increasingly volatile market, including Cameron Dawson from FieldPoint, Stephanie Lin from ITAP, Steve Stolznick from Timber Hill, and Kevin Landis from First Hand Capital Management. Plus, former Council of Economic Advisors Chair Jason Furman will join us to help make sense of all the drama happening in DC and how it impacts your portfolio.
Let's get straight to the big stories that we are watching this hour. Mike Santoli tracking the market action as always. Elon Moy with the details on the tangled web of legislative drama right now in Washington. And Steve Leisman has the highlights from the testimony of the Fed Chair Jay Powell and the Treasury Secretary Janet Yellen. Mike, though, kick it off with the market. Definitely a different flavor to today's sell-off with bond yields falling and tech outperforming.
Yeah, a little bit of end of month, end of quarter kind of mean reversion of the dominant trends for the month and the quarter. So that might be part of it, but also, yes, yields are giving up some of their gains recently. A little end of the 2-week range. Some of the technical damage or kind of maybe diciness of the trend is starting to surface here. I mean, a couple of things to note. We are, as I said, we did retest the lows from last week on the early side. We're down just about 4,300. That was, we lost about 1%, 45 S&P points after the sort of Joe Manchin headlines. We've regained about half of that. So I do think you could look at it and squint and say maybe we're just kind of testing in there. But we have spent most of the last 2 weeks under the S&P's 50-day moving average. Before that, this year, we didn't spend more than a day below it. You also have gone back to early July levels in the index itself. So clearly, we've had a pretty thorough reset of this market, loss of momentum. The question is, are we just kind of, resettling lower and creating values? We have not had the speed of a dip buying instinct, though, as we have in prior times this year. That's something to keep in mind. Take a look at how stocks have fared versus long-term bonds and also commodities this month.
I have to go to the
pull out of here. One is that the S&P moving alongside the long-term bond ETF. That shows you that they're now pretty much out of the head. Right now, when bond price. That would all make some sense there. Take a look here, too, at a kind of virtual versus real world type trade. We're seeing it in retail. We also see it in finance. So this is the FinTech ETF against the banks index. And I just love the absolute automatic kind of repelling action there that we've seen gone in different directions. It hasn't been the case kind of moment for moment over the course of the year, but it shows you that this month has been about moving somewhat away from software, virtual assets, toward real reflationary assets. That's not a bad economic message. The question is, is the market kind of digesting that in a comfortable way here, guys?
Yeah, and multiples, I would think, have a lot to do with that as well. So, Mike, I mean, you can pick your poison. People blaming the Fed and the taper, the hawkish tone from Fed Chair Powell, the corporate warnings, the China Evergrande scenario, the European gas shortage. But a lot of people just saying September is always an ugly month, seasonally. What does October hold?
Well, there's an opportunity for September to be an ugly month. And I think that one of the reasons, multiple reasons that it manifested that way was mainly investors were just loaded up on equities going into the month. I keep coming back to this. I think it was the case all the way going back to April that people were all in. They didn't need to buy more. They were buying more on every dip because it seemed like the uptrend was totally unbreakable. The bull case has become a little bit less clean in terms of, oh, the Fed is our friend and earnings estimates are way too low and profits are soaring. That's become a little more complicated as we decelerate. October, in years that have been up when September's been tough, October also sometimes is a little bit touch and go at the beginning, so you can't rule it out just because of the turn of the month. However, the start of each quarter has tended to be an opportunity for buyers to come in here. So we'll see how tomorrow unfolds, guys.
We'll see how the final 55 minutes unfold as well, Mike. A really interesting little turn south over the last debt ceiling to the funding bill to the infrastructure plan. And Elon Moy has a breakdown of all we need to know at this hour. Elon.
Oh, Wilford, we are waiting for a breakthrough on that $1 trillion infrastructure bill that House Democrats say they will bring to the floor sometime today. Now, Speaker Nancy Pelosi met this afternoon in her office with moderates and progressives for about an hour. After it was over, lawmakers said that the tone was positive, even if there wasn't a whole lot of movement. Here's the head of the Congressional Progressive Caucus, Pramila Jayapal.
We have said clearly, and we reiterated this again to the Speaker, and we're in the same place, that we will not be able to vote for the infrastructure bill until the reconciliation bill has passed. So we're in the same place.
Now, those comments emerged as new details came out about Joe Manchin's demands for supporting the big social spending package. Those include lowering the price tag to $1.5 trillion, setting the corporate tax rate at 25%, and the capital gains rate at 28%. Now, another key moderate senator, Kirsten Sinema of Arizona, she issued a statement today also opposing that $3.5 trillion price tag. She said that she has made her red lines clear directly to President Biden and that she is negotiating in good faith. But guys, right now, we're just all in a holding pattern here on the Hill. Back over to you.
Are those two going to have to cave, Elon? Are they likely to cave, or is this kind of to be expected at this late stage so they can save face and they're more likely to go higher rather than force the president lower?
Well, someone's going to have to cave, Will, in order for this to get done. Either they are going to have to go higher or the progressives are going to have to go lower on that number. And that top line number is important because it determines how much revenue they're going to have to raise in order to pay for this bill. The administration tries to message this as a $0 social spending package because they say eventually it's all going to be paid for. But exactly how big some of the priorities are going to be, the trade-offs they're going to have to make in order to meet them, that is all critical parts of this negotiation and something that they're trying to work out now in order to get the infrastructure bill done as well.
Elon Moy, keep us posted. Thank you very much. We'll stick with Washington. The Fed Chair and Treasury Secretary both testifying again today on Capitol Hill. Second time this week. Steve Leisman with the highlights. Steve.
Sarah, thanks. Yeah, Treasury Secretary Janet Yellen supporting in testimony today a long-standing, simple, but politically impossible solution to these repeated debt ceiling crises. Just eliminated. Yellen said she supported a bill to get rid of the debt ceiling because that's not where the spending gets done.
Believe when Congress legislates expenditures and puts in place tax policy that determines taxes, those are the crucial decisions Congress is making.
Ask your guest Jason Furman about it. He thought about this in 2017. For his part, Fed Chair Jay Powell said he's not worried about addressing the trade-off between inflation and unemployment because he sees inflation coming down while unemployment will go up.
Right now, we're far away from, we think, away from full employment. So that gives us an incentive to keep accommodative policy strong, to keep accommodative policy in place. Inflation is well above target, and we have an expectation that high inflation will abate because we think the factors that are causing it are temporary.
Powell acknowledged that supply bottlenecks are getting worse. They were supposed to get better in the fall, but he said he thinks now they're going to begin to ease in the first half of 2022.
So he didn't say the word transitory, but he kind of was somewhere in between where he was in Jackson Hole and where he was at the last Fed meeting. Still says it'll wear off. Steve, what did you get? What kind of vibe did you get from the politicians toward Powell after Senator Warren called him a dangerous man at the last hearing? Obviously, the senators matter here more, but what are you gathering in terms of the political mood around Powell and whether the Biden administration will reappoint him in February?
Well, first of all, I didn't hear anything on the level of Warren calling Powell a dangerous man. By the way, I haven't heard anything from Warren on that level towards almost anybody before Warren went after Powell yesterday. I didn't hear from other senators on Tuesday, and I did not hear it from the representatives today. It seemed like today was a way of criticizing Republicans, criticizing Biden, the president, through Yellen. Not much heat at all on the chair. In fact, Sarah, the issue of the conflict of interest really only came up in the issue of you should use the opportunity, several congresswomen saying, you should use the opportunity of the resignation of the two presidents to enhance diversity on the Federal Reserve Board. And it worked.
We have heard Senator Warren have some pretty angry words before, Steve. Maybe not to Fed members, but to my bank CEOs, definitely we've heard that sort of rhetoric before. Anyway, that's for another time. We have to move on. Steve Eastman, thanks so much. We have a news meanwhile on General Motors. Sorry, Steve, Phil LeBeau's got the story for us. Phil.
Well, take a look at shares of General Motors. The news here involves the company's subsidiary, Cruise, which is developing an autonomous vehicle rideshare program out in California. Cruise, along with Waymo, those two companies have both received from the California DMV autonomous vehicle deployment permits. What does that mean? It means they're no longer permits simply for testing. And in the case of Cruise, it moves Cruise one step closer to offering autonomous rideshare to people on a paying basis. So you and I could be in California, in the Bay Area, where the approval is for certain areas of San Francisco, and we could, in essence, hail a Cruise autonomous vehicle to take us to a certain destination, whatever it might be. When will they get final approval? That's up to the California Public Utilities Commission. They are the ones who finally give them the official approval. No indication when that will happen. But again, this is Cruise one step closer to offering an autonomous rideshare service in San Francisco that'll be open to the public. This won't be a testing program anymore. It'll be, you call it up, you go. Guys, back to you.
Yeah, step closer to the future. Phil, thank you. Maybe a mini pop there for GM going positive on the session. After the break, Field Points. Cameron Dawson joins us with the sector she likes going into the new quarter as a tumultuous September. I think Wilfred called it a sloppy September comes to an end. And it is that. We are tracking for our worst month for the S&P since March 2020. You're watching Closing Bell on Cnbc.
Tell someone you're a financial advisor, and they think you only work with money. But the most important part of my job is working with people, giving advice. Of course I know the markets, but more importantly, I know my clients. I know what they're concerned about, and what they're looking forward to. I give them personalized financial advice they can count on to help make it through today's challenges, while staying focused on tomorrow's goals. Ameriprise Financial.
Of all the companies on the Fortune 500 in the year 2000, more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3 AI. This is Enterprise AI.
ESG is responsible investing. Who's responsible for building ESG into your investments? At PGIM, the pursuit is on for outperformance. As active investors to out-deliver with customized strategies, integrating ESG best practices into our investment decisions. As asset managers and fiduciaries to outserve with our commitment to better ESG outcomes. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
We see increased efficiency connected to more comfortable homes. Emerson's Energy Star certified Sensi Smart Thermostat uses geofencing to simplify how homeowners manage comfort costs. Emerson, consider it solved.
sectors could have a rough go. Squawk Box, 6 a.m. Eastern. Watch Squawk Box anytime on demand.
Cooking felt hard. But that was before the always pan. Best nonstick ever. Shallow enough to saute, but deep enough to fry. And I can cook 3 things at once. Plus, it comes with its own steamer basket and genius spatula rest. Best part? Cleanup's a breeze. It's kind of life-changing. Smart news.
I was only watching news I agreed with.
I was only getting news from social media.
Now, I use smart news.
It has news from all sides.
I
trust Smart News. Download Smart News for free today.
With Fundrise, you can invest here from there. Our innovative platform puts premium real estate in the palm of your hand. Join our community of over 150,000 investors today.
Welcome back. It's another volatile session on Wall Street to cap off a brutal month for investors. Joining us now with our outlook for the rest of the year is Cameron Dawson, Chief Market Strategist at Field Point Private. Cameron, good to see you. Thanks so much for joining us. My first question is whether this recent bout of volatility has led to a kind of clear change in sentiment from your clients. Are you getting a lot of calls?
Not necessarily, no. I mean, we can see that there has been a deterioration in the overall sentiment if we look at things like the AAII bull bear indicator. And we have seen a big uptick in bearish readings. But we think as far as investors, retail investors go, we should really see about what they are actually doing and not just what they're saying. So what we're seeing is that equity allocations still remain near all-time highs despite some of the wobbles that we have, and cash allocations still remain near all-time lows. Now, one really interesting thing is that we are seeing more spikes in puts buying, and so this indicates that people may not be scared enough to really sell positions, but they are willing to take some downside risk protection, and that's why they're buying puts. But we're really not seeing capitulation and selling of people saying, this is too risky, get me out of it.
In terms of positioning within the US equity space, Cameron, a lot of people seem to be saying the place to be now is the less high-priced stocks and the cyclical stocks, but has that become too much of a consensus already?
I don't think so, because if you look at flows data, what you can see is that through the summer growth scare, we actually had extreme outflows of cyclical assets, so positioning is still very light. Things like higher yields really help cyclicals as well, and seasonality is typically supportive of cyclicals given the fact that we're now in that sweet spot of October to April. The last thing that we would look at is the fact that economic surprises, which is just economic data coming in below expectations, have gone negative. And so when those economic surprises are so low, it's typically a good contrarian buy indicator for cyclicals. But the one caveat is that we really haven't seen big downgrades to earnings estimates, despite the fact that economic surprises have gone negative. So I think what you're getting at is that there's still a really high bar for earnings going into the third quarter, which is why we think we're seeing such big downward moves to negative earnings updates from things like Nike or FedEx or Bed Bath & Beyond today and the whole retail complex. So that does get you to the point that if you are going to play in cyclicals, you have to be highly, highly selective.
You guys manage $5 billion in wealth management, Cameron. What are you telling your clients right now to do with some of the most widely owned, most beloved tech stocks, which did get hit and showed their vulnerability to higher rates in the past few weeks?
So we don't think that you can think of tech as just one big hole and that you need to throw the whole tech baby out with the bathwater. Instead, what we think that we need to approach tech is that if we're going to make any rotations within tech, where we want to be trimming is not necessarily those stalwart growth tech names that are the highest quality, largest companies, but we really want to trim those very high multiple, very speculative, and innovative better in those value areas than they do in speculative tech.
Cameron, thanks so much for joining us. Good to see you.
Great, thank you.
Up next, pharma giant Merck is a bright spot today after announcing a multi-billion-dollar merger, but it was the CEO's comments about the company's COVID antiviral drug that caught our attention, and we'll explain why next. As we break, check out some of today's top search tickers on Cnbc.com. I imagine the 10-year yield is on that list. It almost always is, particularly at the moment. The list is coming. There it is. The 10-year yield is top of it. Bed Bath & Beyond down 20% today, unsurprisingly. On that list as well, Tesla, Apple, and the Dow round out the list.
My retirement plan with Voya keeps me moving forward. They guide me with achievable steps that give me confidence. This is my granddaughter. She's cute like her grandpa. Voya doesn't just help me get to retirement, they're with me all the way through it.
Voya, be confident to and through retirement.
We don't want a bank. We want financial freedom. That's why we rewired the American financial system. So your money can work as hard as you do. For your first home, for his degree, for her future. That's what we're chasing together. All in one act. 7 million strong from Main Street to Wall Street. The money line. Here we rule.
What happens when we welcome change? We can make emergency medicine possible at 40,000 feet. Instead of burning our past for power, we can harness the energy of the tiny electron. We can create new ways to connect. Rethinking how we communicate to be more inclusive than ever. With app, cloud, and anywhere workspace solutions, VMware helps companies navigate change faster. VMware. Welcome change.
It's another day, and anything could happen. It could be the day you welcome 1,200 guests and all their devices. Or it could be the day there's a cyber threat. Get ready for it all with an advanced network and managed services from Comcast Business. And get cybersecurity solutions that let you see everything on your network. Plus an expert team looking ahead 24/7 to help prevent threats. Every day in business is a big day. We'll keep you ready for what's next. Comcast Business. Powering possibilities.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he can access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So, we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
Cnbc, in collaboration with Telemundo, celebrates Hispanic Heritage Month. Join U.S. Education Secretary Dr. Miguel Cardona in a digital town hall event October 13th. Explore the power of financial education, opportunities strengthening the Latinx community, economic equality, plus Dr. Cardona's outlook for the next generation in a nationwide Q&A. Register now at cnbc.com/financial education.
Merck moving higher after making a multi-billion-dollar acquisition today and also sharing new details about its oral COVID antiviral treatment. Meg Dorrell spoke earlier with the CEO, the new CEO, and joins us now with more. Meg.
Yeah, it was a really big day for Merck and its new CEO, Rob Davis. He just took over July 1st, and they announced today they're spending $11.5 billion to buy Acceleron Pharma at $180 per share. Big biotech deal gives them a phase 3 drug for a rare disease known as pulmonary arterial hypertension. They're expecting to close this deal in the fourth quarter, but of course we had to ask him about upcoming data expected for their COVID antiviral pill. This is the one called Molnupiravir that they licensed from Ridgeback Bio. Here's what he said about his expectations or his hope for what that drug could do for this pandemic.
It's something where we think if we can give it early in the course of the disease, it can really take it from being the devastating disease that COVID-19 is to something that's manageable. And that's so important because it's a pill. it's something that obviously it can be quite accessible to the general population. So we're excited about this because I do think it can really change the way people will think about COVID-19 if they're unfortunate enough to be facing it themselves.
And the moment of truth for this pill, guys, is potentially just weeks away. They're expecting data by November, perhaps sometime in October, potentially being able to file for emergency use authorization by the end of the year. So fingers crossed it works. And there's more in the pipeline from Pfizer and Roche and Atia as well, guys.
Yeah, we need good news on all those. Thank you, Meg. Meg Terrell. Still to come, former Council of Economic Advisors Chair Jason Furman joins us to break down all the drama in Washington surrounding the debt ceiling and the infrastructure bill, and what it all means for the economy and your money. And as we had a break, a quick check for you on bonds. Yields are actually moving lower today. The 10-year down to 152, still elevated and really have marched straight higher since the last Fed meeting where Fed Chair Jay Powell laid out his taper timeline and potentially started talking higher rates. We'll be right back.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
That building you're trying to sell, you should 10X it.
10X it?
10X is the world's largest online commercial real estate exchange. If I could, I'd 10X everything. Like a coffee run. Don't just sell it, 10X it.
Today, global markets are challenging traditional assumptions like never before. There is a new accelerated sense of responsibility, sustainability, and social equity. At NASDAQ, we call it the era of impact, and we're at the forefront of it, innovating technology, data, and insights to help you deploy an ESG strategy to be seen as the company you aspire to be.
40% of employees are afraid they won't have enough money during retirement. 66% are saving for health expenses not covered by insurance. 95% of employees are thinking of quitting. 100% want their health and well-being to be secured. The numbers are daunting. The solution isn't. If you want your workforce to remain your workforce, invest in them. We can show you how.
Now's the time to unleash crypto's boundless potential. When those who dare act. When those who yearn break free. When the bold build. And Arculus is the cryptocurrency storage solution designed to protect it. Get safe, simple, smart access to the rewards of crypto investing. Arculus, your keys, your crypto.
You ready for an adventure?
Show me what you're cooking.
Got more of the Cnbc shows you love?
Let's go, let's go!
This is our passion. This is everything for us. Stream your favorite Cnbc shows anytime for free on Peacock now.
It's a mixed up world, and the way we work looks a little different. But whether you embrace the new normal, or just want to get back to the routines that feel right, XChair continues to be at the forefront of change, which is why we've launched the all-new XChair with Carmax. Carmax combines gentle body temperature regulation with stress melting massage to increase your comfort working from home or at the office. Feel more refreshed in seconds with dual fans that actively deliver cooling airflow. Or you can wrap your back in the soothing warmth of heat-therapy and access 4 combinations of massage for deep relief from tension. Our patented dynamic variable lumbar support and Cyclo infinite recline technology remain unchanged. Order an XChair with LMAX today. Use code TV and get $50 off plus a free footrest. Hey, change happened, and we've made it a good thing with all new LMAX from XChair. Now the future feels better than ever before. Order XChair with LMAX today. Use code TV and get $50 off plus a free footrest.
That's about 30 minutes left to go in the trading session. Let's check in on some individual market movers for you. Lordstown Motors moving higher on a report it's nearing a deal to sell its Ohio plant to Foxconn after owning it for less than 2 years. The sale will help Lordstown raise cash and could be finalized later this week. The stock moving up more than 6%. And shares of Virgin Galactic also soaring today after the FAA ended its investigation into Richard Branson's July flight, which deviated from its restricted airspace. Virgin Galactic trading up more than 13%, Wilfred, and now the company's free to focus on its next flight, which had been postponed. The one that includes, I think, some members of the Italian Air Force.
Still a long way, of course, off its highs, though, is Virgin Galactic. We're down about 0.5% on the S&P 500, just under 30 minutes left, which means it's time for a Cnbc news update. Rahel Sullivan's got it for us.
Indeed it is. I will address what's happening at this hour. The Department of Homeland Security telling immigration officers that lacking documents is not enough reason for immigrants to be deported. Homeland Security Secretary Mayorkas telling the Washington Post that the Biden administration will continue to focus on deporting immigrants who pose a threat to national security or public safety. Suicides rose 15% last year among U.S. armed forces. The Pentagon says that there were 580 suicides in 2020. The Army and Marine Corps posting some of the biggest increases. Senior Pentagon leaders called the jump troubling and are calling for more efforts to reverse the rising trend. Teen vaping is falling sharply, but still remains a serious public health concern. That's according to a new government report. About 11% of high school students said that they recently used e-cigarettes. That's down from nearly 20% last year. Flavored e-cigarettes were used by nearly 85% of high school vapers. And in Michigan, murder charges have been dropped against a man who was wrongfully convicted and the death of 5 children. Jawan Deering spent 15 years in jail for a crime that he did not commit. Prosecutors say that evidence was withheld during his trial. You're now up to date. Sarah, I'll send it back to you.
Rahel, thank you. Rahel Solomon. The House Financial Services Committee holding a hearing today on oversight of the Treasury and Federal Reserve's pandemic response. Up next, former Council of Economic Advisors Chairman Jason Furman here to weigh in on what he heard in today's testimony. We'll be right back with the Dow and the Nasdaq moving in opposite directions. This time, the Nasdaq is higher on the session.
This is how you become the best.
Time to yourself. So when you do, make it count with Crest Pro Health. It protects the 8 areas dentists check for a healthier mouth. The #1 toothpaste brand in America, Crest.
Ready, sous chef? Using fresh, quality ingredients can make or break your dish. With HelloFresh, they always deliver, literally, to your doorstep. I love this dish. It's got more layers than a Canadian ski trip. And you won't find these in any old grocery store. Don't forget to add some of that TLC. Want to learn how I just did that? HelloFresh. It's fast, it's fresh, and it's the ultimate skill shortcut.
Go to HelloFresh.com and use code VOD14 for up to 14 free meals.
Your eyes, beautiful on the outside, but if you have diabetes, there can be some not so pretty stuff going on inside. It's true, with diabetic retinopathy, excess sugar can damage blood vessels, causing vision loss or even blindness. So remember this. Now is the time to get your eyes checked. Eye care is important to your long-term diabetes management. See a path forward with actions and treatments that may help your eyes and protect against vision loss. Visit nowic.com and take control of your sight.
You invested $10,000 and it turned into $1.3 million.
Our core audience is what we call skin in the game fans.
Generation Gamble. Premieres Tuesday, October 5th, 8 Eastern, Cnbc.
Movies under 16, they need customized car insurance from Liberty Mutual, so they only pay for what they need.
They're not getting you a helicopter.
Only pay for what you need.
Liberty, 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 liberty. Build a MailChimp store for free. Free as a bird free. Get your business online and build a MailChimp store for free.
With GoToConnect, you can connect how you want, even like this.
Whoa, listen to this. The first Venom Let There Be Carnage fan screening reactions are in. Yummy. It's the most insane film of the year. Venom, rated PG-13.
drama in Washington heats up. There is progress on averting a government shutdown, but the future of President Biden's infrastructure, reconciliation bills, and the debt ceiling remain in the balance. Joining us now for an exclusive interview, former Council of Economic Advisors Chair Jason Furman. I guess it's nothing new in Washington, but what we really are seeing, Jason, the tensions exposed in the Democratic Party. The moderates holding up some bills, the progressives holding up bills. How do you expect this to play out as it relates to two pillars of the Biden administration's economic agenda?
Yeah, I think it was Winston Churchill who said something to the effect of Americans do the right thing after they've exhausted all the alternatives. That's certainly true about Congress. They go through lots and lots of phases of drama. But at the end, I think on most of this, they're going to end up in a sensible place. We're seeing that with funding the government. I think things are going to pass in the infrastructure and reconciliation bill, some which way as well.
Really? With Senator Manchin saying $1.5 trillion is his upper limit? It's about $2 trillion short?
Oh, there's a large spread there. There's a lot they're going to need to work through to get there. It's definitely not guaranteed. Nothing is guaranteed when you need 100% of one party and you don't have any of the other party. Even as 1.5 trillion leaves some room, though. How do you count a tax cut, for example? A lot of the environmental provisions, a lot of the provisions for children are actually tax cuts. If they count on the tax side of the ledger, that would enable more spending and not count against the 1.5 trillion.
Jason, excuse me one moment, because Greg, we've got you here to react to what is some breaking news crossing right now on the government funding bill, which Elon has for us. Elon?
Wilfred, the House now has the votes it needs to fund the government through December the 3rd. That vote is still ongoing on the floor, but the current tally is about 221 in favor, well above the level needed to clear this bill. Now, the Senate passed a version of this bill earlier today, so after this vote is done, it would go to the president for his signature, allowing Washington to avoid a government shutdown at midnight tonight, as the House now has the votes it needs in order to pass the government funding bill. Back over to you.
Elon, thanks so much for that. Jason, I guess that sort of kind of proves your point on one of these two big parts, which is that they'll get there in the end.
Yeah, I'm glad they did this through December. I'd much rather see them work.
Is today Wednesday? No, it's Thursday.
Appropriations bill.
That's funny.
Let's spend more in this area. Let's spend that less in that area. Autopilot for 2.5 months is less than ideal, but it's a lot better than the alternative of a government shutdown.
Oh, I see what you mean, because why am I broadcasting? Yeah, I'm getting my multi-streaming setup working here on Twitch and YouTube and all the different channels.
Figure out how to get through it.
You think we should get rid of the debt limit, right? You've written about this. You've reminded us at the top of the hour after some of the drama that we saw last time in 2011, which led to the downgrade of U.S. government debt. Why do we go through this time and time again?
What do I think about? What is that? Do you mean Nike? No, it's a penny. Okay. NIHQ. K. NIHK. Looks like it's never been at a better price, You probably sell. I know you mentioned you were looking for a pullback on Vail. It was a couple of months ago. Have you looked at the daily on it since? Yeah, but I don't think I remember. Let's see. Yeah, good Lord. Yeah. That's pretty damn right, huh? Yeah. That was a pivot point breakdown. Look at that now. Hope I saved you some money.
Jason, want to pivot and talk as we pivot to inflation? We haven't got that level of inflation, obviously. But to what level do you think that it's kind of a self-fulfilling prophecy when it does persist now for many months, not just a few months, and at quite pronounced levels? And is it a concern to you?
I think inflation is going to be more persistent than what the Fed is counting on. It'll certainly come down from its recent white-hot levels, but I see it stabilizing closer to 3% than the 2% that the Fed is counting on. I think a lot of ingenuity has gone into pointing out all the transitory components of inflation, like used car prices, less has gone into the shoes that have yet to drop. Shelter inflation.
Jesus, Netflix doing great. Fuck. Look at that.
Wages passing through to prices.
Netflix currently the winner of all of the
economy's receiving. I think all of that adds up to inflation well above what
for some reason I'm tired. I can't remember the name of what they call that. All of those, you know, Google, Microsoft, Apple. It's an acronym. I don't know why I can't think of it right now. But yeah, everything else down. Netflix soaring. Soaring to new highs today.
The bills will be largely paid for, especially the reconciliation. The money spread out over time. They increase the productive capacity of the economy. If somehow they generated inflationary pressures, which I don't expect, the Fed would have time to deal with them. So there's a big difference between the legislation they're talking about.
Thank you, Fang. Thank you.
What happened in March when
they have another word for it too. I can't even remember it right now. Fang something. I can tell my mind is getting tired today. End of the day.
Jason, one very quick final question.
Well, we've got 18 minutes left on the market, and the market is reacting negatively to government shutdown being avoided. Amazing. The market tanking, of course. Of course.
I have a lot of friends on the Fed. I think a lot of good things have happened with the combination of Jay Powell, Lael Brainerd, and the others on the Fed.
Okay.
You don't think he's a dangerous man?
I trust President Biden will make an excellent decision about Fed chair.
Jason Butler, good to see you. Thanks so much for joining us as always. When we come back, a slew of retailers getting hit on concerns over supply chain issues. We'll have a look at those stocks and the rest of the markets, of course. We are slipping a little bit. The Nasdaq's holding on to a fractional gain, but may well be negative by the time we come back from the short break.
This is how you become the best.
Our core audience is what we call Cnbc fans.
So you definitely think of this as more skill than luck.
Cryptocurrency trading platforms, it doesn't feel like real money.
Do you realize that Dogecoin was started as a joke? Yes.
People are starting to develop very risky habits. I'm trying to motivate our generation.
Generation Gamble. Premieres Tuesday, October 5th, 8 Eastern, CNBC.
Introducing 48 square centimeters of 2% cashback earning potential. This is the card built for real life. The new Wells Fargo Active Cash Visa credit card, that's real life ready.
Architect's daughter. Yeah, I love the font names on some of these. Jesus Christ. Oh, that's funny.
Welcome back. We've got a news alert on the embattled media startup, Aussie Media. Julia Borston with the story. Now what, Julia?
Well, Sarah, now Mark Lasry, CEO of Avenue Capital Group, owner of the Milwaukee Bucks, and a frequent guest on Cnbc, announcing that he's stepping down from the board of Aussie Media. In the wake and forward, Aussie requires experience in areas like crisis management and investigations where I do not have particular expertise. For that reason, I have stepped down from the company's board. I remain an investor in the company, and I wish it the best going forward. Now, it is unclear exactly how much he invested in the company. Aussie Media co-founder and CEO Carlos Watson did refer to Lasry as a lead investor in a round of investment in 2019 of some $35 million, but it is unclear how much Lasry did put into the company, guys.
Julia, thanks so much for that. Very interesting turn of events there. Let's pivot now to the markets. 12.5 minutes left in the session. Now all the action closed. The CNBC markets updated by
SDPI starting to move up.
As always, and today we've got ITAB Chief Investment Strategist Stephanie Link with us as well. Let's kick things off with the broader markets. Stocks volatile on this last day of sloppy September and the last day, of course, of the third quarter as well. All three major averages on track for monthly losses, and the Dow's on track for its at least down 425 now. The low is 490, so the Dow, the lagger of the day, but the Nasdaq's been dragged into the red as well.
It has. The S&P is only about 10 points above its low from earlier, which matches just about the low from early last week. So it's clearly a much heavier tape than we've had for a while right now. If you look on the chart, it's starting to kind of roll a little bit. I mentioned earlier, we're trading at levels first weeks, literally in the first few days of July, the first few days of the third quarter. So it has unwound a lot of the index upside. I don't know that you can decisively say, therefore, that's a larger trend change, but it does show you there's a change of character because we have usually had a much stronger buying impulse triggered by these 3-4% pullbacks and hadn't had to kind of go revisit them for a while. Could be seasonal, could be because you have this policy fog out there, and frankly, just this decelerating moment where we're getting into mid-cycle type mindset. I think the positives are a lot of stocks are down a ton already, and investor sentiment is absolutely reset to be much more cautious at this point.
I wanted to hit on the policy fog for a moment.
Palt has an interesting 1 hour chart. Something for tomorrow, potentially. Let me see. I just grabbed some SDPI. Well, it's running hard.
Is that a bill that this market wants to see come to fruition? It's not clear what that would do to economic growth. It would come along with higher taxes.
Yeah. No, not really on Palt, no. And it doesn't look like it could continue either.
I think
my
we need
opinion.
Infrastructure improvements, right? So I can understand why both sides are there, but the dollar amount is the wild card, and I don't know why you can't pass the 1.7 first and then see what else you need down the road. And I think that's what the supporters of not doing this entirely are saying. So, I think the market wants something because we need it, but we don't need the whole big bazooka because we don't need emergency policy both on monetary and fiscal. As Mike touched on, the last day of the quarter really kind of an ugly day. Some of it's noise, but some of it's not, Sarah.
Well, I'm already up 11% on SDPI. This puppy is freaking running.
FedEx, Dollar Tree, and Bed Bath Beyond, they haven't executed consistently for years. Versus Nike and McCormick, really well-run companies and are proven winners. And so I think into this disruption, whether it is talking about this package coming down the pike, or whether it's China, or whether it's Delta, you've got to find ideas on sale. I'm not there yet on Nike, but I am kind of intrigued. And of course, the other side of the story here today is really the
Superior Drilling Products.
And away from the cyclicals and the reopens. I still think you want to be in the cyclicals and reopen because I still think you have a lot of liquidity in the system, and that's very, very much positive. and I think that's going to lead to better growth. We just got a 6.7% GDP number. At the same time, we got a PCE number core at 6.1. So we've got growth, we've got inflation, rates are going higher. That usually is a recipe for value versus growth. So I'm sticking with my guns there between now and the end of the year, and let's see what happens in Washington. It's a wild card.
We're continuing this familiar pattern, selling off into the close. Every sector is now red. Even technology has gone red, and the Dow is down 477 points, a leg lower in this final few minutes. 9 minutes left of trading. Supply chain disruptions continue to hammer the retail sector. Bank of America downgrading Kohl's today, saying supply chain issues could hinder the company's sales recovery. The firm warning there's a high risk of Kohl's running out of stock in its activewear and women's private label products. Bank of America also citing supply disruption for its reason for resuming coverage at Foot Locker as an underperform rating. Factory shutdowns, port delays, and Nike supply chain are bound to affect Foot Locker due to its high sales exposure to Nike, according to that firm. Bertha Coombs is looking at how supply chain issues are hitting another retailer, Bed Bath & Beyond, which is getting whacked today. Bertha.
Yeah, not a pretty print, Sarah. Bed Bath & Beyond said it anticipated supply chain problems, but in CEO Mark Tritton's words, they couldn't pivot fast enough when freight costs and delays rose more than expected at the end of the quarter, particularly in August. That hit their margins hard. The retailer posting a miss and lowering guidance, saying it's not getting any better this month. He also blamed the Delta surge for hitting store comps in California, Florida, and Texas. The company's still confident about its turnaround, but in the earnings call, it also mentioned a downtick in traffic and search for home furnishings, which, Sarah, makes you wonder, another headwind for
Interesting. It makes you wonder if the market would have rallied hard if they shut down the government. I mean, the market right now is going down on that the vote looks like it's going to not shut down.
Supply chains, it becomes harder to tell who has demand problems as well.
No, that's very true. Bed Bath & Beyond is down 64% since December of 2016.
Oh, an interesting 1 hour chart on Pound.
Now, I know there's new management there, and they were making some data
I see what you see, but
with this new management team, but to not be able to see what was happening big picture is very disturbing. And I would simply say home furnishings being weak, well, that's not what Restoration Hardware is saying. That's not what Williams-Sonoma is saying. It certainly isn't what TJX is saying with home goods comps of 36%. So I think that Bed Bath & Beyond is losing market share. They're kind of hiding behind these supply chain issues. And the Delta, I understand everyone's going to get hit by this. But it's those companies that can pivot and increase price. I mean, look what Dollar Tree did yesterday. They totally changed their strategy. They're no longer going to be a dollar store. So you've got to make some really important decisions. 12 times earnings, it's cheap, but I don't want to play for that misexecution potential.
Mike, is it earnings and Bed Bath & Beyond related why Staples is doing so badly today?
Consumer staples?
Yeah.
I'm not sure if that's the case, because yesterday they actually outperformed. They're giving some of that back today. There's no doubt that the supply chain stresses, natural gas prices surging, this idea that you might not be able to navigate, that intermediary role, probably weighing a little bit. But what I'm also interested in is the spillover effect to, a retailer like Target, down almost 3% today. People assuming this is going to be somewhat a generalized problem, even if those, more challenged retailers like Kohl's, like Foot Locker, which already trade at super cheap levels that say that they are not growth companies in the foreseeable future, leading the way down, I guess.
Yeah, and you can put maybe Nike in that category too, as it's been hit. The worst performing sector on the S&P right now is the industrials. Christina Partsinevelos with a look at what is driving the drop and some of the movers. Christina.
Well, the sector's actually being dragged down by airlines and machinery at the moment. So you've got Deere that we're going to pull up on your screen, 3M, United Rental, Boeing. Those ones are actually all inching towards a 2% drop at the moment. And then you've got Alaska Air, one of the biggest laggards in the group, down almost 3%, followed by United, Southwest American, and Delta. But they've actually outperformed for the month, so not all negative. And Global Jets ETF, Jets, of course, up 3% month to date, even though the entire industrial sector is down over 5% month to date. According to RBC Capital Markets, industrials, which are considered cyclical, have seen earnings estimates fall more often than rise in recent weeks. So, of course, we've got supply chain issues and higher costs hurting margins.
Looks like we're going to break the low of September 20th before the market closes here. 4 more minutes.
Worry about the cyclical picture
What's up, Grant Boley? Grant Boley, how's it going?
Yeah, I mean, I always worry about the industrials because
What
it's
are
so
you up to?
inconsistent.
How'd you do today on the market?
They're down 7% from the May highs, still up 11% for the year. I think you do have to watch these supply chain issues, obviously, after FedEx. But I have to tell you, I've talked to companies, I've listened to conference calls. 3M, Parker Hannifin, Dover, Eaton, these companies all have said it has nothing to do with demand. It has everything to do with supply. And that goes back to my comments on you have to have pricing power, whether it's consumer discretionary or whether it's energy or whether it's industrials, whatever sector. You're going to have pricing power. You're going to have lean cost structures. And a lot of these companies, Sarah, in the last 18 months, they have restructured and restructured because they had to, right? And they've improved their balance sheets. So I pick very carefully in the space, and there's special situation stories. Reopen is Boeing and getting 737 MAX up and running. GE is about changing the whole business mix into aviation and healthcare, what they do well. They just made a great acquisition recently. Emerson is a hidden energy play with technology and new management and great free cash flow. And Caterpillar, that's the scariest one of them all, but he's buying back $2 billion of stock, and he's got $1 billion of free cash flow that he's generating each year, and he will benefit from higher commodity costs because they'll be able to price increase. So special situations within the industrial sector, but those are the ones I like.
Cyclical stocks like industrials meant to be the safe havens, of course, at the moment, or relative safe havens in light of inflationary pressures.
Down bad from RGC. Yeah, son of a bitch. That was a really bad fall. Amplitude spiking right now. Let me take a quick look at that. RGC. Yep, there it is. Yep. It was important to cut it when you were supposed to cut it. And that was at, I can't remember, I think 440, 2340, something like that. I feel that.
So clearly to the downside, but not so much a real washout like we've seen a couple of times the past 2 weeks. Take a look at high yield, the high yield ETF, HYG, compared to a comparable Treasury ETF. And this is, over the course of the last couple of weeks, wanted to point out that high yield continues to outperform. That means credit spreads have been relatively well behaved. They're not at their best levels, but they're clearly just kind of being dragged by equities into a weaker state as opposed to flaring and really setting off alarms that something really much worse is going on in terms of macro stress. Volatility index really is not waking up that much, given the fact that we are back at last week's lows pretty much in the S&P. We're still under 24. Since we were just there at these levels a week ago, maybe you already kind of had the pre-panic. We do have kind of strange quarter-end stuff going on in terms of people locking in some gains and also...
And there we go.
It was a huge fund that did that. Just during the course of today. Doesn't mechanic.
That's the closing bell.
45 seconds left to go. The S&P 500 down more than 1%. The Dow down 1.5%.
Hello. Who was that?
Which has been positive for most of the session.
Chino Three Hand. How you doing? Thanks for following. How did your day go today? What are they all clapping about? S&P and 500 on track for... I gotta take a photo of this. This is hilarious. Oh my god, I hope I got that. That's just hilarious. They are all applauding. You bet it is. Look at that. I'm telling you, I picked the best time to switch over to cash and gold. My goodness.
Take a look at how we finished up the day on Wall Street. Down 547 on the Dow. And another leg lower there into the close to session lows. Biggest drag on the Dow, United Healthcare, Home Depot, and Goldman Sachs.
So you say you were green on the day? All right. What did you trade? What was your winning trade? Let's take a look at it.
Lower on the day. Technology did outperform, so did communication services. Industrial is the hardest hit, as we mentioned, down more than 2%. For the month as a whole, the only sector to close higher, energy. Everything else was lower. Materials, the hardest hit, down 7%. NASDAQ finished down 0.4%. Looks like it was going to go higher on the day, but that couldn't keep the gains into the close. The NASDAQ down more than 5% in the month of September. The Russell 2000 index of small caps closing down 1% as
downdraft, 43.06 or something. So we had this sort of hold down to that level. The highs for this week, almost every single day after 10:30 a.m. on Monday, 43.80. So we've sort of just stayed there in this very sort of mechanical way. Why does that, I think, maybe take a little bit of precedence over the action? Because we're in the absence of urgent buyers, humans deciding whether to get in or not at a 4% down level from a high on the S&P. And if you told me that that's because of the confusion in D.C. and people just not feeling as if they want to reload on equity exposure going into the fourth quarter when that's the case, the fact that you had the upturn break stride a little bit so it feels less reliable, I believe you. But it doesn't mean to me that the policy issues are the real economic swing factor from here on out. It's much more a headline-driven thing, and probably the market just wants it done as opposed to caring about a particular number that comes out of D.C.
Steph, we touched on industrials already, and I get your point that you want to be in the names that have pricing power, but the broader cyclical sectors were meant to be the areas to benefit in the current environment. Do you worry with a day like today where the sectors are sharply lower, that that's already a kind of consensus trade?
I don't think it's consensus. I think people are talking about it. I don't know if they're actually acting on it, Will. But look, I think at the end of the day, you have to be confident that the economy is going to be above trend and stay above trend, and that inflation is going to
So if anyone's watching, I'm happy to do any trade review. If you like, or chart analysis.
oil's up 90% year over year, but copper and lumber are also back up to new highs in terms of recent highs, not back to the old highs, but they're still up. And we have wages and shelter costs inflation, which are much more sticky. So you do have better growth, you have more inflation. I listened to a company called Paychecks.
Hello. Are you guys not? Hello. Shit, like you guys aren't getting my mic, I think. What? Maybe you are. Let me see. Ah, yeah, there you are. Okay. Oh my god. So yeah, happy to do some chart analysis for you guys. Just let me know what you'd like me to look at. You can hear me. All right, thanks. I know that was weird. It was just I wasn't seeing the needles move in the audio side.
So to some extent it is, and I know it's incredibly dangerous to say this time it's different, but I think what we're seeing now is we've had more or less the perfect storm for the last 18 months. It's been great. That it's been pumping in liquidity. The fiscal policy has been a real tailwind to the markets. The economy, as Stephanie was just saying, has been wonderful for a whole bunch of companies. I don't think that
Take a look at gold. See, so the market tanking, gold having a big green day. And that's typical sign. That's a typical sign that things are bad. Because the market can go down and gold can go down. But when gold goes up and the market goes down, that's a flight to safety.
So Mike, with today's close, have we now had that 5% pullback at a close? From I think we have just about.
Yeah, I think it's just barely, it's at the lows of last year, the lows.
So that 5.2%, does that change people's perspective as one of those support levels? We talked about the moving averages in the past. Is that significant or not really?
Am I too loud? No, I'm not distorting, am I, when I speak?
Get you out of that streak. So we can stop talking about how long it has been since the last 5% pullback, but there's nothing particularly magic about 5%. We can start talking about the different rules of thumb. Historically, if you get past 7, it goes to 10, all these silly things. But no, I think we've actually given up some of the trend support, like some of the moving averages are below the 100, which is where it bounced earlier this week. And I think that it's kind of the burden of proof is shifting to
right, you guys, have a good one. It was good training with you and setting this stuff up with you today. And I'll see you in the morning at 9 a.m.